Equity markets around the world are eagerly awaiting the US Federal Reserve's next interest rate decision. Speculation is rife that the Fed might announce a rate cut, a move that could have significant implications for global financial markets. Lower interest rates in the US tend to weaken the dollar, making US exports more competitive. This can impact the balance of trade and influence currency valuations globally. The potential for a rate cut has already fueled a rally in some equity markets. Investors are anticipating that lower borrowing costs could stimulate economic growth. This optimism, however, is tempered by concerns about slowing global growth and ongoing trade tensions. The Fed's decision, therefore, will be closely watched for its potential to either bolster or dampen market sentiment. The interconnectedness of global financial markets means that the Fed's decision will have far-reaching consequences. Emerging markets, in particular, are sensitive to shifts in US monetary policy. Capital flows, exchange rates, and domestic interest rates in these economies can be significantly affected by the Fed's actions. The US Federal Reserve is not the only central bank capturing the attention of market participants. Both the Reserve Bank of India and the Reserve Bank of Australia have scheduled monetary policy meetings this week. These meetings come at a time when both countries are grappling with their own unique economic challenges. India's central bank is tasked with balancing the need to support economic growth with the imperative of keeping inflation in check. The RBI will be closely monitoring domestic economic indicators, including inflation data and industrial production figures, before making its decision. The Reserve Bank of Australia, on the other hand, is contending with slowing economic growth and subdued inflation. The RBA has already cut interest rates twice this year in an attempt to stimulate the economy. The upcoming meeting will likely involve a careful assessment of the effectiveness of these prior cuts. The decisions taken by the RBI and the RBA will have significant implications for their respective economies. They will also provide valuable insights into the state of the global economy and the policy responses being considered by central bankers around the world. Beyond the pronouncements of central banks, investors will also be keenly focused on a slew of economic data releases this week. These data points provide a real-time snapshot of the health of the global economy and can significantly influence market sentiment. In India, the release of Purchasing Managers' Index data for both manufacturing and services sectors will be closely watched. The PMI is a forward-looking indicator of economic activity, and any signs of weakness could raise concerns about the pace of India's economic recovery. Money supply and bank credit growth data are also due for release in India. These figures will provide insights into the level of liquidity in the financial system and the willingness of banks to lend to businesses and consumers. Strong credit growth is generally seen as a positive sign for economic expansion. Globally, investors will be keeping an eye on inflation data from major economies. Rising inflation can erode purchasing power and stifle economic growth, making it a key concern for policymakers and investors alike. Section 4. Earnings. Season gathers steam, corporate scorecards take center stage. The flow of corporate earnings reports is set to pick up pace this week, providing investors with a glimpse into the financial health of companies across various sectors. Earnings season offers valuable insights into corporate profitability, revenue growth, and management's outlook for the future. Among the major companies scheduled to report earnings this week are several technology giants, consumer goods companies, and industrial conglomerates. Their results will be scrutinized for clues about the impact of slowing global growth, trade tensions, and evolving consumer preferences. The technology sector in particular will be in focus as investors assess the impact of the ongoing trade dispute between the United States and China on global supply chains and demand for electronic devices. Section 5. IPOs. Gauging investor appetite in uncertain times. The pipeline for initial public offerings remains active this week, with several companies planning to list their shares on stock exchanges. IPOs represent an opportunity for companies to raise capital to fund growth initiatives, while also providing investors with a chance to participate in the early stages of a company's development. The performance of IPOs can serve as a barometer of investor sentiment and risk appetite. A strong reception for IPOs suggests that investors are optimistic about the prospects for economic growth and the ability of newly listed companies to generate attractive returns. Conversely, a lackluster response to IPOs could indicate investor caution or a preference for more established companies in the face of economic uncertainty. Section 6. Global Trade Winds. Deciphering signals from China and the US. The release of trade data from China and the United States this week will be closely watched for any signs of progress in resolving the ongoing trade dispute between the world's two largest economies. The trade war has weighed on global economic growth, disrupted supply chains, and fueled uncertainty among businesses and investors. China's trade data will be analyzed for clues about the impact of US tariffs on Chinese exports, as well as the strength of domestic demand in China. The US trade figures, meanwhile, will provide insights into the effects of retaliatory tariffs imposed by China on American goods. Any signs of a de-escalation in trade tensions would be welcomed by markets, as it could boost business confidence and pave the way for a more stable global trading environment. Section 7. Navigating the Labyrinth. Charting a course through economic cross-currents. The confluence of central bank meetings, economic data releases, corporate earnings reports, and geopolitical developments creates a complex and rapidly evolving landscape for investors to navigate. Discerning the interplay of these various factors and their potential impact on financial markets requires careful analysis and a long-term perspective. While short-term market fluctuations can be driven by sentiment and speculation, fundamental economic principles ultimately underpin asset valuations. Investors who focus on understanding the underlying drivers of economic growth, corporate profitability, and global trade flows are better positioned to make informed investment decisions. In this environment of heightened uncertainty, it is essential to maintain a disciplined investment approach, diversify portfolios across asset classes, and stay informed about the latest economic and market developments.